Hey everyone, welcome back to Corporate Decoder. Today, O.S.P.R.U just filed a current report on Form 8K, and I am seeing an important update on their IPO. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company just closed its initial public offering and privately sold units, and this filing gives us a look at the money they raised. So Osprey Acquisition Corp III, or O.S.P.R.U as it trades, has officially gone public. They completed what is called an initial public offering, or IPO, on the 2nd of July 2026. This is essentially when a private company first sells its shares to the public. They sold a massive number of units, over 30 million, and they even had to sell more than originally planned because there was so much demand, which is a good sign for them. Each unit was priced at $10, and together with the extra units they sold to cover demand. This brought in a huge amount of money, around $300 million just from the public offering. Now, what exactly is in these units? It's a package deal. Each unit contains one Class A ordinary share, which is like a regular share of stock, and also 1/3 of a redeemable warrant. Think of a warrant like an option. It gives the holder the right to buy a Class A ordinary share at a set price, which is $11.5 in this case, sometime in the future. This is pretty standard for what are called special purpose acquisition companies, or SPACs. But that is not all. On the same day, they also did a private placement. This means they sold units directly to a select group of buyers, not to the general public. They sold another 747,000 units at that same $10 price, bringing in an extra $7.47 million. Part of these private units were bought by the main underwriter of the IPO, Cantor Fitzgerald, and the rest by the company's sponsor, Osprey Acquisition Sponsor III. It is common for these sponsors to invest alongside the public. So where did all this money go? A huge chunk, over $300 million, was put into a trust account. This is a safety net for the public shareholders. This money is generally meant to be used for one thing, to acquire another company. SPACs like this are essentially shell companies formed to raise money and then find a private company to merge with, taking that company public in the process. This filing also lists the securities that are registered to be traded. We have the units themselves, trading under the symbol O.S.P.R.U, then there are the Class A ordinary shares, listed as O.S.P.A, then the warrants. Trading as O.S.P.R.U, all of these are listed on the Nasdaq Stock Market LLC. This confirms they have successfully completed their IPO and are now publicly traded entities. The company is registered in the Cayman Islands and has a commission file number and an IRS employer identification number. Their principal executive offices are in Philadelphia, Pennsylvania. They are also classified as an emerging growth company, which allows them certain flexibilities in reporting requirements. Looking at this filing, it is pretty straightforward. It is mainly announcing the completion of their IPO and a related private placement. The crucial piece is the amount of money raised and how it is being held. For a SPAC, the real action begins after the IPO when they start the search for a target company. This initial filing is just the starting gun. They've also provided an audited balance sheet as of the 2nd of July, which shows they've received all this IPO and private placement money. This is important for transparency and verifying the financial health right after the offering. Now, looking at this more broadly, O.S.P.R.U has successfully raised a significant amount of capital for its acquisition efforts. The dual offering structure, combining the IPO with a private placement to key stakeholders like the sponsor and underwriter, is a common strategy to ensure a solid financial footing post. IPO, a key risk for any SPAC is the time frame it has to find a suitable acquisition target before the IPO funds are returned to investors. If they don't find a deal, the money is typically returned. The success of O.S.P.R.U will hinge entirely on the quality of the company they eventually merge with. Given that they've raised over $300 million, they're likely targeting a substantial business. The market's reaction to their future acquisition announcement will be the next critical event to watch. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Link to our Discord is in the description.